VIX dips below 12 here at the open. Dow's up 160 and obviously 3,300 for the first time on the S&P. Let's get to Bob Pisani. Bob?
Yeah, S&P 3,300, Dow 29,000. We're firing on all cylinders and a number of breakouts occurring. Let's just take a look at the sectors right now. Tech, of course, breaking out. Consumer discretionary strong. Banks having a better day. They've been selling off going into earnings. Better today. Morgan Stanley was just terrific numbers. Consumer staples and the Vanguard REIT also strong as well here. Retail I mentioned up. Semiconductors up. Emerging markets also up for the day. There's a number of things we're talking about catching up with technology. A number of sectors doing very well. Here's the Nasdaq 100 up 4% for the year. But the IPO ETF right near historic highs, 7%. Home construction's outperforming. China stocks have been doing well ever since the beginning of the year. Aerospace has also been an outperformer. So it's not just tech out there. There's a lot of other things that are performing not only in line, but even better than some of the technology stocks. Banks are better today on the Morgan Stanley numbers, but KBE, predictably, this is the bank ETF, selling off going into earnings. This is a very typical phenomenon. But we had some very particular things happen this week in the earnings overall. If you just take a look, so little disappointment with Wells Fargo, small disappointments with U.S. Bancorp. You see down for the week here. PNC was in line. Morgan Stanley way above expectations. Citi hit a new high yesterday. So you see mixed results on the overall actual earnings that we're getting for the week. For earnings today, Morgan Stanley, big beat on the top line and the bottom line here. Look at that. That's 7% on the upside. Big move for Morgan Stanley. Charles Schwab, slightly below expectations, but they're giving them a break because there's a lot of discussions about that upcoming deal with Ameritrade. And on that, they did have the press release this morning. Didn't have an actual press call, but they had a press release. And you can see here, assets, this whole Ameritrade deal is really about assets under management and synergies. Big asset gatherer, Charles Schwab. $4 trillion, up 24% year over year last year. And of course, on the Ameritrade deal, they said they are aiming to close in the second half of 2020. They've said that before. We don't have a new update, but obviously this is under review right now. There may be some small antitrust issues, but we haven't had a big update. That's where we're at still so far. As far as what's going on, remember, this is not about trades. This is about synergies, and it's about gathering assets. The new combined entity would have more than $5 trillion in assets combined, and it's also about synergies. You're going to close a lot of sectors there that are going to be redundant, and they are talking about very significant cost synergies overall. What else is going on here? Why the deal is going to have? Look, this is all about the banks. 60% of their revenues are from the bank, net interest income. So when the yield curve changes, it really matters a lot to a company like Schwab. They also have a very big asset management division. Of course, they've got a very big ETF division. They have funds that are out there, and they make money on that, 30%. So there you got 94% in that. Here's trading, what we always talk about. This is what zero commissions eventually will do to you. You're down to essentially 3% and others about 3%. I expect you're going to see a lot more consolidation this year in a lot of these other businesses, particularly the ETF business. Carl, there's 150 ETF companies out there, but the top 5, including Vanguard and BlackRock, they have 90% of all the assets. 5 companies, 90% of the ETF assets.